And we're back to the Crash Labs. With me today, man, it needs almost no introduction here, Mr. Sean Roosen. Someone who I've looked up to since getting into this industry, followed very closely, tried to mimic some things. Sean, it's really a great pleasure and honor to have you here today with us. And so very happy to have this chat.
Well, great to be on your podcast, and thanks to all the Crash Lab listeners for hanging in there. And I think we got an exciting time in front of us in this space, and certainly with the elections down south and what's going on, I think it's a great time to be giving people an update, and everybody should be maybe taking a look at this space a little harder as we get into 2025.
Now, what do you think? What do you think? Going back to that election for a sec, obviously a lot of people were surprised. Maybe not so that Trump won, but they were thinking that maybe Trump was going to have this profound impact on gold right away. Do you think that was was that an expectation of yours, or were you kind of surprised by the pullback in the market?
Well, we financed just before the elections as gold hit about 27.80, 27.90, almost 3,800, over 3,800 Canadian. We're a Canadian-based project, so we need to think about that arb as well. We felt that there was an election premium on gold going into the election, and there might be a settle no matter what happened coming out. Gold's responded pretty well, I think. I would have thought there was more like about a $200 election premium on gold while the market was waiting for direction. Gold's held in there well. It's sitting 26.70, 26.60 today. I think that if you look back at the curve, I mean it's really done its job. That premium was there coming into the election. Now that the market has got direction, I think the U.S. dollar strengthened off the back of that quite a bit.
Yeah, it did,
and it's certainly against the Canadian dollar and a lot of other things. So, I think that direction in the marketplace does give us foundation, but it also shows that gold's sticking above 2,600. It's still tracking like it wants to do the Goldman Sachs and J.P. Morgan 3,000 here. So.
Mm-hmm. Now, do you think that the outlook is bleak for the dollar, like with the money spending, and obviously we've got like Elon announcing Doge and all these sorts of things, just like clean up the spending. Do you think they're going to be able to do that, or is this still going to be something where we're going to hear, the fiscal side of it being in sort of duress? Coming back into the news cycle, and then everybody kind of looking at gold as a fear trade again?
Well, I think that both gold and crypto are being the alternative to the reserve currency. The U.S. dollar has had a monopoly on that space for a while now. The new kid on the block is crypto. Gold, if you look back at the last 20 years, has done its job perfectly. From the lows back in 2000 of around $300 an ounce to where it is now. Mm-hmm. At 26.70, it's tracked right on. It's actually outperformed the S&P 500 most of the time. No other currency has really held up that well. The U.S. dollar is still the strongest currency out there in terms of overall reserve, but you can see that people are putting pressure on and testing that reserve currency status with things like the brick and crypto. Now I think it's over almost $3 trillion. Of net value out there, and so it's a real contender now. It's larger than a lot of small countries' outstanding currencies are, and you see some of the experiments like El Salvador, where they're just skipping away from the U.S. dollar or doing a combination of U.S. dollars and or crypto, rather than trying to run their domestic currency, and getting run over in the hyperinflation business, which has been sort of what's going on in Africa and Latin America, and a lot of the world is hyperinflation has just been running over these economies time and time again. So there is an alternative to it now. I think the U.S. has to compete with crypto, and you've seen Trump be very active on the crypto markets, and I think that gold is getting some new life off the back of being the alternative to gold. Like if you don't like crypto because it doesn't have any tangibles, mm-hmm. then gold is your only real other one. And obviously you got 5,000-6,000 years of history there that shows that it's probably the best token out there, probably better than the drunken monkey. So.
Yeah, well, I mean, I think one of the things I noticed with it is that in the run up to this election, probably for a good year and beyond, you're starting to see a lot of these hard asset advocates like Ron Paul, guys like this, in the sort of sphere of influence around Trump and Musk and this whole group, right? And it's neat to see those hard asset guys in there because we've never seen that before. And this is the first time now with Trump coming in that he's actually addressing BRICS. Like the past administration didn't give it any daylight at all that this was even going on. And so that's really interesting too. So I think it could be a good boon for gold in time to come. But with that said, I mean, you've had a very illustrious career in this business. And
we've been very lucky and very fortunate.
Well, and you worked really hard. And I think one of the things that differentiates you from others that I've seen is that you sort of never stop. So depending on where the market is in cycle, like obviously we know mining, gold, whatever it is, there's these cycles, and it goes up and it goes down. And I've seen you just as active at times when things are blowing up as when times are on the rise or in between. So how much does that kind of macro cyclicity affect your thinking and like what you're...
Well, my basic theme is that you're going to make all your money in the downtick market. You just won't know it until you have a good market.
Okay.
But, if you look at the assets that we've been successful on, we bought them mostly in the down cycle. Canadian Malartic is our biggest success, the biggest gold mine in the history of Canada, and certainly a cornerstone to Agnico now with the evolution of the underground. It's over 30 million ounces, over and above what was historically mined there. When we sold it was around 14 million ounces plus the Odyssey discovery and some of the other discoveries that hadn't really been flushed out yet. But Odyssey alone is now 16 million ounces. Canadian Malartic itself went to 14. So these kind of assets, and if you look back at that transaction, we bought that gold deposit from a bankruptcy in 2003. And Barrick had sold it for $1 in 2003 to a company called McWaters, and we bought it for $88,000.
Holy shit.
And we, as you know, fast forward, we ended up selling it for $4.1 billion, and then we built Osisko Gold Royalties out of the spinco from that's now worth $5 billion. Out of that also came Osisko Mining 2, which got sold for $2 billion to that, and then we've got the other companies like Osisko Development and O3, Cisco Metals now with the Gaspé Copper, and Falco Resources and BRW and some of the other spincos that were created off that platform. So that one down cycle transaction has generated over $12 billion worth of companies now. So that's that's the best bankruptcy sale I've ever been to.
Yeah, that's a crazy story. One of the things too that you do different, I think, is that you're not I see a lot of guys talk about, raising limited amount of capital, being afraid of dilution or this or that, and they're scared to raise significant enough capital to move things forward. At least from my perspective, when I look at you and your success, a lot of it's been defined in earmarking good assets and good geology, good areas, and then doing what hasn't been done with them, which is to throw real money at them, like big money at them.
Yeah, I mean, the core value that we operate by at Osisko is called SUDS, which stands for Shut Up and Drill Stupid.
The best.
All wealth is created at the drill bit in our view, and then mine building and mine extraction is just really a de-risking opportunity. But you have to identify that wealth first, and that happens with the truth machine, the drill bit. Where we've been slightly different than other people is we've sent out to look at things. We're essentially brownfield specialists for the most part, to go back and do new science on old mines and old mining camps. When we did Canadian Malartic, it was unheard of to have a sub 1 gram deposit in Canada. Everybody said it wouldn't work, and everybody in Montreal and Toronto knew that it was impossible to make that work. And when you ask them why, they say, well, just because it's Quebec and Ontario, it's cold here.
Yeah.
I said, well, around the world it's working, and I don't think the cold factor is as much of a problem as the warm factor is. The amount of money that you spend on heating things in Canada and removing snow, as opposed to what you spend trying to cool things down in Australia and the rest of the world, is pretty equal. At the end of the day, bulk tonnage is the way that mining has gone. For those of I like high grade mines as much as anybody else, but there hasn't been a lot of big high grade winners out there. Most of the deposits that are winning in the world right now are 1 gram or around that. open pits and underground. The big mines, underground mines right now are in the 2 to 3 gram window. Things like Young-Davidson or Goldex or LaRonde, or the new Odyssey, which is at 2.6 grams, I believe. 16 million ounces, but it's all in that 2 gram window. So it's about taking advantage of technology. It's about having big long-term plans where you can divest capital. We see block caving and underground bulk methods bringing costs down significantly. Things like the new Afton mine in BC that are on block cave at $6 a ton mining cost.
Which is unheard of.
Yeah, it's probably $20 a ton setup costs.
Yeah.
But it mines itself through fracturing and it falls down, and you have automated mucking operations, and you really don't need any human beings in the main mining operation. You need everybody to do the development work.
Yep.
But you can pretty much mechanize all of that cycle, and that's where we're headed. We don't have the same quality of underground high grade miners that we had in the past, where we had like super skilled narrow vein miners. People don't want to do that work anymore, and the safety regulations around it prohibit it in a lot of times of doing it the way that it was done in the past. So we have to modernize, we have to move on, and with the evolution of AI and highly mechanized systems, we're able to take advantage of those technologies in bulk mining scenarios, whereas in high grade mining scenarios they don't really change too much.
That's an interesting take. I never really thought of that. Yeah, you're right. Like a big bulk tonnage scenario could definitely leverage automation technology and remote operations because it's Tonka trucks in a sandbox.
Yeah, and you're in a controlled environment in the same place for a long duration of time, so you don't have new setup. Like with narrow vein mining, you're moving quite quickly around the ore body.
Yeah.
So you're always in a brand new environment, so you can't really set up draw points. I mean, I started out underground at Kidd Creek Mines in Timmins, which was a 17,000 ton a day mine underground.
Yep.
And they had 2 shafts and they ran for 40 years. So you're in exactly the same spot with exactly the same infrastructure for 40 years. And that was all fed, essentially through ore passes and then a single shaft lifting it to surface, and those 2 shafts, now 3, but, did the work for 40 years. So if you can create that big infrastructure at the beginning, then you can lower the grades that are required, and a lot more of your stuff is in the money. And you're amortizing your costs over a longer period of time, as well as you're bringing down the cutoff grades into a significant place where a lot of out-of-the-money things, if you try to go small scale, are just never going to be ore. And the definition of ore is something you can make money on. So making ore now requires that you have a highly mechanized approach to it, whether it's bulk tonnage through block caving or transverse stoping or long holing. With
I was going to say
equipment.
long holing would be like sort of like the big step change in underground mining that occurred that allowed for some level of
well, I mean, we're evolving the Caribou Gold Project in Wells, BC, which has been mined essentially since 1858. But we're the first ones to go underground on bulk tonnage mining. We're using 30-meter high long hole, so 100-foot levels in between, and a lot of that equipment is highly automated. And we can use automated haulage equipment. We can use automated mining equipment for development. We have a joint venture with Sandvik using electric road headers, which have been used in civil works for a long time. But these machines essentially have a grinding head at the front of them. They mine 2.5 meters, then the head retracts 2.5 meters. The platform moves forward. It mines another 2.5 meters. But
so it's not like a jumbo, or there's no drilling and blasting. It's just
constantly just big cutter picks on the front of it.
Yeah.
Like a big porcupine head. It just grinds the rock up and it chips it. And you get 2.5 meters without any human intervention. And then once it reaches the end of its 2.5 meter cycle, the operator has to move the platform forward. But because it telescopes out, the platform is in one place for the time that it's doing that 2.5 meter cycle. And the ground control teams can work from the top of the machine because it doesn't move. And they can do ground control while they're actually cycling. So you can't do that with a jumbo.
Does it save money on ground support too? Because it's like it kind of hangs together better because it's a circle.
And then there's a lot less vibration in the mine because you're not blasting every two times a day. So you get less interference from blasting operations in your geotech. So it makes a super fine tunnel, reduces the amount that you have to put in terms of ground control.
Yeah.
It looks just like a London subway when you're done. It's a nice smooth finish. And it's a fully electric operation, so you avoid creating any contact water with ammonium nitrate fuel oils, which we have to treat now.
Yeah.
So you're reducing your water contact base, so it's quite good that way. And we're running on hydroelectricity from Site C in British Columbia, so we're on green electricity. So the more electricity that we can use for the mining cycle, the more we reduce our carbon footprint.
Right.
So that's a big winner. This is a project that we think it's going to come online at 5,000 tons a day, for which, thanks to the BC government, we just received that permit. And so that was a big catalyst for us.
Congratulations. Yeah.
Yeah, that was huge. And, I think that when you look at what makes a good project these days, you need a good ore body, you need to have defined it well, and you need to be in a place where you can get permits in a reasonable amount of time. Because the cost of being on these big projects, especially brownfield projects where you're probably inheriting some infrastructure fees that you have to maintain, are huge. And, just every day there's a cost to being on one of these big projects. So permitting timelines, I think, is one of the big ingredients in the cake now.
Yeah.
And BC, we just did 4 years and 8 months to get for a 4,950 ton a day permit, which is, pretty fast by the cycle. The average in the industry right now is 14 years, which is, throwing some shareholders have just said, you know what,
I'm good. I don't want to.
I'm good. I'll just invest in the things that have permits. So that's an important aspect for, when we look at the regulators out there and the governments that are trying to encourage mining investment. Timeline on permitting and cost of permitting is the number one ingredient that we need to work on, especially here in Canada and North America.
Have you noticed, with that said, have you noticed a lot of, given the fact that you're interested in brownfields and taking projects on and advancing them prior to being, mines and getting them that stage, have you noticed a difference in the landscape vis-a-vis sort of a lot of others have said, there's no more institutional capital left. A lot of the big institutions or institutional capital shift to passive capital, ETFs, things like that. The big active funds, not really that active. Have you noticed that? Like, as someone who's been
I think
probably raised more money than almost anybody can think of?
Yeah, we've had good access to capital as a group. Across the entire platform, we've raised about $3.4 billion of equity since we started the group. So we're pretty well known in the institutional world. And, but it's, as the saying goes, you're only as good as your last deal. So, my saying is that the best jockey in the world can't win the Kentucky Derby if he shows up on a donkey.
Right.
So if you're a good jockey, you're going to show up with good projects. And if you have a good project, the cream always rises to the top. And permittability, I think, has gone up the ranking in terms of what makes a good permit now. Mm-hmm. A good project, an investable project, is a significant top 3 item. You can't have a great project in a tough jurisdiction that's either geopolitically unstable or permitting unstable. You could say that security is a big factor in terms of determining investment, but if you have unstable permitting regime, it's the same effect. You can't operate the project and you can't get it investable. If you look at the Fraser Institute's ranking right now, you've only got one jurisdiction in Canada that's in the top 10, which is Quebec.
Yep.
And then Ontario's right on the edge now. And then BC's, moving back up, but they were in the 20s.
My little Newfoundland's up there on the old list.
And the Rock has got her going.
Yeah.
And then, the top jurisdictions right now would be Utah, Nevada, Arizona, and some of the U.S. jurisdictions. So it's an important list to be on, and I think in terms of generating jobs that matter politically, we've seen what happened to all the sort of the green economy and the transition metals and all these supposed jobs that we're going. We've got one disaster after another right now.
Yeah, scandals
and Northvolt and all these things.
Yeah.
Been very tough to convert this green economy into sustainable jobs. Sustainability is our goal. I'd say gold mining has still managed to create more stable jobs than most of the other things have. Copper mining, obviously. Copper is always the winner. Iron ore is always the winner. You can't build a windmill or a solar panel without putting it on some sort of an iron post or stand. So, iron ore and coking coal should have been on the critical minerals list for a long time.
Yeah.
But when we look at where that economy is going, copper is still sitting around $4 US a pound. Mm-hmm. That's not telegraphing that we're building a huge piece of infrastructure right now. It should be $6 or $7 if we're going to build 330 new mines that the environmental agency in the U.S. said that we needed if we wanted to make this electric car transition. So yeah, there's a disconnect between what the market is telling us in commodity prices and what the politicians are saying is going to happen.
You have a play on copper in your ecosystem right now?
We do.
Yeah, what is that one?
Well, we've got one in Utah called the Tintic project.
Yep.
Which is an old Kennecott property located just 40 miles south of Bingham, which is the second largest copper mine in all of the U.S. and all North America. And our friend Robert Friedland's on our southwest border, and Freeport's on the southern border. So we're drilling there right now, so fingers crossed. We're drilling a copper gold porphyry, hopefully Bingham-style lookalike.
Yep.
In that graben. There's a big graben there. We have 17,000 acres of patented land. So it's quite an impressive project. There's 23 historic producers there. 5 of them were gold mines that were producing gold-rich flux for the smelter. Mm-hmm. The highest grade one was running 45 grams a ton, so we've just accessed the underground from that this year. We're going to be doing some more exploration development on that. We've got a small resource that we're looking to to start mining next year. We've got some CRDs, some carbonate replacement deposits that are silver, lead, zinc there. As well. So there's 18 historic producers in this CRD bottle, but we think there's quite a bit to be had there. This thing also has produced a few other byproducts like manganese. There's no domestic production of manganese in the U.S. right now. It's on their on their strategic minerals list.
Okay.
So we're looking at that. So that's within Osisko Development, that's one of our big plays. Osisko Metals, we have the Gaspé Copper Project, which is now 1.5 billion, roughly 1.5 billion tons of 0.34, 0.38 inferred and measured and indicated. Previously a producer located in Gaspé, Quebec for those of you not familiar with Canada, it's about the most eastern portion of Quebec. It sticks out to the north of it is New Brunswick.
Yep.
That mine was in production, I believe, for 40 years. It was previously an open pit, and obviously at these copper prices, pretty good exploration play there. Within Osisko Metals, there's also the Pine Point project, which is silver, lead, zinc.
Yep.
So that one's the joint venture. There's $100 million financing in that one right now that's taking it to feasibility.
That's super high grade, that Pine Point thing.
For open pit, yeah.
It's one of these things, kind of like these
yeah.
mantos, right? Like you get these big sort of.
It was a mine for 50 years, right?
Yeah.
So that one's on the go, and then we have a bunch of copper stuff that sort of in the incubation stage in BC that we're always active on the copper projects. We also, through a couple other affiliated companies, we continue to be active in the South American copper stuff.
Yep.
A little bit in Mexico, but we're always on the lookout. We ran a big project back in 2010, 2011 to review what we thought was going to be the next generation of copper mines, and that's where we came up with the Tintic project. We were looking at things that were going to be block cave or big underground mines. And as we transition, a lot of the easy stuff has been found by our grandfathers were good prospectors. So everything that has a rock sticking out of it has been sent to the lab. So the next generation of greenfield exploration is all going to be blind targets. Certainly on brownfield, that's where we've been successful, is to go into old camps and try and extrapolate the data that exists. Probably an early version of AI was what I would say found Canadian Malartic. Mm-hmm. We were doing data filtering, looking at old drill intercepts that we felt had continuous mineralization over 0.5 gram for at least 20, 30 meters. And that was how we found Canadian Malartic, and that's why we located that information. So something is different about this deposit. It's not like the rest of the, this 280 million ounces that have been mined from the Cadillac Break between Val-d'Or and Red Lake, where you always had fairly discrete high-grade Archean gold systems. This one was different because you had this widespread grade that was consistent throughout it. It was truly a disseminated deposit, and we went out and bought it on that basis. But we were actually looking for exactly what we found. Mm-hmm. We didn't land on Malartic just like, okay, let's stake it because it's open.
Yeah.
We were actually looking for that type of deposit. I'd had the good fortune of just spending 13 years in West Africa when the Birimium and Archean opened up. So I did a lot of greenfield exploration in West Africa off the back of some of the early BRGM work.
Me too.
Yeah, we were Mali, Niger, Burkina,
I was in Ghana.
Ghana, Cote d'Ivoire. I was more in Cote d'Ivoire at the beginning.
Man, that's working out great. There's a lot of projects coming.
Ivory
to
Coast
from,
was
like,
the best piece of
Kalangia.
the Caribbean, but it was also the most difficult to work because it's a highly agricultural, really developed country.
Yeah.
There's plantations over everything, so very expensive to move around on exploration in environments like that. It was much easier in the desert, Niger, Burkina, Mali. You saw Mali West. We were in Mali West in the 80s. Did all that stuff. And
What's your background? Like, how did you get into all this? Like, what's your?
I went to the Haileybury School of Mines in Northern Ontario.
Yeah.
I became an underground miner in Timmins at the Kid Creek mine at 18.
I was going to say, well, that was my question on Kid Creek. Yeah. Okay.
Yeah, I started there as a blast hole driller, actually. So I was on the mini bore, 8.5
Nice.
inch blast.
Was it
holes.
hot?
Not then. We were on the about 1,280 foot level, and then 2,400. And by the time I left, I was in the 5,200 foot level. But it's much hotter now, and it wasn't that deep now. Now it's down to close to 10,000 feet.
Yeah.
So that's where I started, and then I became a diamond driller for Longyear. So that's where I got the bug for exploration. Started working on.
Did you trade stocks back then when you were drilling?
I was fortunate enough around when I was in Haileybury, the Hemlo discovery came out.
Yeah. Okay. Yeah.
And I was president of Students' Council, and we had our little investment company. So that's where I got the fever, was the Hemlo discovery.
Wow.
And they would send buses down to pick a bunch of us up that could wander around the bush and actually make it back, and we'd go staking up there. And it was kind of a great adventure for a young man. And
So you had an entrepreneurial bunch back then that was.
you know what? A lot of those guys
that
that I went to school with are still in the business, like Tommy Obradovich and Dave Rouleau and a bunch of other guys that went there. It was a good school because they actually taught you 3 years of exploration geology, 3 years of geophysics, and 3 years of metallurgy, and 3 years of mining. So you had a pretty good knowledge of the basics of everything. You weren't an expert in anything, but you could talk the talk, and you could certainly figure out who the smarter geologist was and who the smarter metallurgist was.
Right.
So you had enough basis for that, and that's where I started from, was from the Haileybury School of Mines. And a lot of famous mines came from that camp. Haileybury was next to Cobalt, Ontario, which was the richest city in the world for a long time. So a lot of rich history.
Yeah.
And close to Kirkland Lake, which had lakeshore mines with Sir Harry Oakes, the richest man in the world for many years, until he got shot by a jealous husband.
I had the great fortune of I bought. What year was it? 2015, I think it was. I want to say 2015. I bought. Pretty much out of receivership. It wasn't out of receivership, but from Shirley Gilson. It was Consolidated Professor Mines. They had all the patents in cobalt. Mm-hmm. And this is prior to the cobalt thing. So I bought that for 180 grand. And I ended up, in 6 months, cobalt went nuts.
Yeah.
And the whole lithium, the cobalt craze. And sold that for $7.5 million. So it turned a quick profit and sold a royalty on all those things too, which was insane. So, but yeah, that's the money that kickstarted and Newfound Gold. That's the money.
That's an awesome story. Yeah.
Yeah. So I have a connection with cobalt and kale for sure. And I worked at
we used to go underground there on the weekends with a case of beer and go, take the metal detector and go look for leftover pieces of ore down there.
Oh yeah, for sure.
And so that was a good occupation, and first time I ever did a cross section or any geological mapping or traverse or anything was in Cobalt, Ontario. The school there would take you out and you map the same thing that 100 other guys
had already mapped.
See if you can get it right or not.
Yeah.
But it was a good school, and most of that has moved to Sudbury now to the school there, and as as things evolved, Laurentian's taken over that program for the most part. We're still producing a lot of good mining professionals, but we're seeing more and more that sort of early stage talent is being incubated in places like Ghana and South America.
Yeah, it was a practical school.
Seeing a new generation of young people that are sort of getting enthusiastic about it again. So
it's cool. I mean, look, Colorado School of Mines, kind of the counterpart in the U.S., right? For what Haileybury sort of offered.
Montana and Colorado.
Yeah, Montana and Colorado, yeah. And in, but I will say that there is a missing link because I've worked with a lot of guys that came from Haileybury School of Mines, like John Ray.
Yeah.
I've got a bunch of buddies that, guys I worked for in the past. They were these, and jack of all trades, experts at none, but understood the industry from A to Z.
Yeah.
And it really was sort of a practical school of the industry, not just geology or not just, geophysics or not just this one thing. And so I often wonder, like, is there a need for more of that practical, bringing it all together school specialist thing?
Yeah, I think it's important that we actually sort of teach the people that are in the technical side of the industry the business side of it.
Yeah.
I think what's lacking a lot of times is, we have geologists and engineers that don't actually understand the business of mining, and they don't understand the business of capital markets when it relates to junior mining or mid, developer mining. So that is a fundamental problem. I try to mentor as many young professionals as I can about, like, here's the industry that you're actually in.
Yeah.
You can be the best geologist in the world, but if you don't have a budget to drill and a permit to drill, it really isn't going to matter.
And if you don't know how all the money raising happens and who the bankers are and what their role is and what the role of all these people play in all of it.
You may have your diploma, but you don't know what business you're in yet.
Yeah.
That's my observation on it. So I think there's a big gap there. And, certainly for those of us who have been fortunate to crack that code and figure out how capital works in this business, is very rewarding. And, that's the key to shareholders too. And, when you're doing sort of single asset companies, incubation style stuff, you're often focused on, one single bank account. You have no revenue, obviously. So it's the approach that people need to do is they need to think about it as R&D, as opposed to a business. You're raising money to test an idea. And if that, just the same as you would be doing drug testing or testing a process or something else, because people get confused that that they're in a business. You're actually consuming the bank account. You're taking the risk.
Yeah, it's not a business.
And the only way you're going to add value is by incrementally making a discovery or acquiring a project with your capital, with your stock. But you're a long ways from revenue when you're doing exploration. And the transition from exploration to revenue is a very hard road. And
Hell yeah.
I'm old enough that they call it the Lassonde curve, the time value of money. Ned Goodman explained it to me that he had taught it to Pierre. It was actually the Goodman curve.
Oh, really? Is that what he's trying to take claim for it? Okay.
Yeah,
well,
he says,
maybe.
He's like, where do you think Pierre learned it from?
Yeah.
But anyways, I'll leave it to Pierre to figure that out. But it certainly is, it's been a constant in life, and it's certainly where you fit and the cost of your capital when you're in the Lassonde curve is kind of the one thing that I think that management teams need to be cognizant of and understand when you're raising money and when you're getting shareholders to understand the risk that they are or are not in. That's that bridge is where we live. We're going to do enough exploration to increase the value of the asset on an NPV basis, but we're not actually going to be able to create a revenue. But we're going to see the value of the deposit go up through drilling, which you've done a great job on Newfoundland Gold. And there's the evolution of that is it's the exploration cycle. You get a certain set of shareholders that are much more enthusiastic, and then they tend to go back down market once you mention the word feasibility study and permitting.
Yeah,
because it happens. That's not their house. They don't live in that part. So that transition period is the hard one to manage. We're just coming out of it now on the ODV side.
With the old
we finished. We put the resource out at 2 million ounces of reserves and 3.3 million ounces of resources back in 2021, and we've been in the permitting cycle since then. So,
which is crazy. I mean, when you started that, when you took that on, there was the old Frank Callahan days, the Cow Mountain, the this, the that, the other thing. There was Bonanza Ledge. I'm just going to throw some. I'm just racking my memory on some of it. And I remember you guys coming in, and I think I had met with Chris. I think I met with Chris and early, and you guys took over that. And I remember, I think you were putting $80 million into into drilling right out the gates on it. And it was on the Caribou Trend, like on the larger structure. It wasn't necessarily playing off of these historic zones that had been...
I'm going to give Frank a lot of credit because he did consolidate that land package, which prior to Frank, it was basically a quilt work of fighting owners.
Yep.
And if Frank hadn't consolidated that, there would have been no job for a guy like me or Chris to come and do, right?
Right.
So he put that land package together. So, shout out to Frank for getting that done. Where it didn't go well was, he was bootstrapping the drilling. Mm-hmm. Nobody had ever actually figured out the overall geological model there, even though people have been mining there since the 1860s.
Like the big picture. Yeah.
And, we got there and I went there with Eric Sprott back in the day, right? He's like, oh, come on, Sean, this is the next big one. We got to go do this thing. And I got there and we spent a year looking at it. And, we finally said, like, Eric, like, everything that we've been know about the geology here is probably wrong. Mm-hmm. We need to do some real science. And to do that, you're going to have to let me and the Osisko guys do it because we can't have too many chefs in this kitchen while we try and unwind this story. Because we had too many guys that are like, oh, we got a press release, we got to put it out next week. I say something, it's like, no. We need to knock in like 50,000, 60,000 meters of drilling, just geological context. We need to do some science. We need to go back and get some age dating. We need to figure out how this system goes together because it's a complex system. It's not in a traditional environment. It's in the Jurassic Age rocks, which are quite young. And there's no real comparable to this deposit that we can see anywhere. Mm-hmm. So we're dealing with a one-off system, and we really need the geology to come together. And then Chris Loader and Terry Harbert and Ruben Padilla and a bunch of the guys, spent about 2 years out there. We tried to relog all the core from Frank's work. Mm-hmm. It wasn't easy. There was a lot of issues around where was the hole in terms of orientation. Core recovery wasn't consistent, especially in the vein corridors. They had a hard time recovering that core. It's one of the things we fixed when we got there is we redesigned the drill program, put in drill mud systems, and we also went with gyro cores and full quality QA/QC program that, because we couldn't really make head nor tails with historic work.
Yep.
And these guys were chasing these replacement systems, which are somewhat more erratic and very hard to drill from surface. Whereas we went for the vein corridors, which were there's 481 of them in the current resource, and they're very consistent. And when you drill a hole, you get 2 or 3 of them with one hole. Now that we're underground, we can basically drill flat straight through them, and we're hitting 5, 6, 10 of these things per hole from the underground. But the lights didn't really go on geologically until 2019. We were there a long time before we figured it out.
Yeah.
And, I'll give a call out to Terry and Ruben and Chris and Maggie for getting that. And Jason Kosak was there as well. That team, they really figured it out. They spent, that was deep science for a long time. Finally,
a lot of drilling.
Finally we got underground and we were able to see how this thing went together because it was really near impossible to figure it out from just drill core. And we saw what the old timer miners were mining, which is these high-grade pods, and there's these big jewelry boxes down there that are, the size of a couple of houses.
And they're spectacular.
Quite big, and they're like 15 to 25 grams, right?
Wow.
They're like almost an ounce a ton, some of these things. But, they're a bit like chocolate chips in a cookie. You can't really predict where they're going to be. Whereas these vein systems that are structurally related to an anticlinal structure and fairly close, almost on like a harmonic, the same way if you fold an accordion open, they're pretty regular, about 8 to 9 meters apart. Mm-hmm. On average. When you took the we've got drilled off over 4.4 kilometers in detail. We got another 10 kilometers that's sort of quasi detail, and then there's the total strike length of the mineralized belt. There's 83 kilometers. So, if you look at something like the Carlin Trend, it's about 80 kilometers.
So these jewelry boxes, just to put you on pause here. So the jewelry boxes themselves, are they sort of interspertially distributed within these vein packages? Like, so you have the vein packages that are predictable and then the unpredictable blowouts? Is that the idea?
So this is a vein. You get these fractures that create a void that are perpendicular to the vein corridor.
Yep.
Oh. And where those vein corridors hit that intercept, you get a blowout, and then you get the replacement mineralization comes in and forms the vein, the so-called jewelry boxes perpendicular to the vein corridors. But the main mineralization is in these vein corridors, and it's quite high grade. The average, every time we intercept these vein corridors, the mineralization is about 11 grams after 8,000 intercepts. But they're a swarm within this structurally controlled zone that we call the vein corridors. And you're going to mine that their average is about 3.7 meters, so you're going to long hole them. They're perfect for long holing. They're about 3.7 meters wide on average. But you're going to dilute down when you do it.
Sure.
So the diluted grade in the 2 million ounces that we have in the reserve right now is 3.78 grams.
Okay.
There's another 3.3 million ounces there, 3.5 grams. So to put that in context in today's numbers, a gram of gold is worth about $80 US, about 100 Canadian. So, 3 gram deposit is now, $300 deposit, $300 a ton. So underground costs, you need to be able to mine at like 120, 140, which we can do pretty easily on long hole in that environment. And, the AISC on this thing comes out to be about $900 an ounce in our 2023 feasibility study. So that's bulk tonnage mining. Having the continuity of these vein corridors is the key to it all.
Totally.
Because you need to be able to mine fast. At 5,000 tons a day, you're mining basically one stope a day. So you've got to, develop that, put in 2 drill drifts, and so it's a lot of work to get to 5,000 tons a day in this thing and keep that frequency. But you have such a huge strike length; it's over 4.4 kilometers long. If you take something like Young-Davidson, it's mining at 2.2 grams. So Young-Davidson is about 65% the grade that we have at the at the Caribou Gold portion. And then, so you could put 4 to 5 of Young-Davidson's strike lengths in that one footprint. And we're only gone down to about 350 meters. Young-Davidson is down to, I believe, close to 1,800 meters now. So we're averaging here about 1.4 million ounces for every 100 meters we go down. So every 300 feet that we go down, we pick up 1.4 to 1.5 million ounces minimum. And some of the good zones are like 22,000 ounces of vertical meter, so you get 2.2 million ounces in 100 meters. And we've still got, Proserpine, this other 10 kilometers of strike that we just don't have enough drilling into. So we've got 800,000 meters of drilling completed here that's on our dime, that has all the QA, QC that we need to make this work. So we're logging, we're doing full gyro, we're re-drill unless we have close to 100% recovery in the core. And then we're also logging directly into wireframe, so that if we have deviation in the hole or something, there's a re-drill or a wedge gets dropped, so that we can maintain the integrity of the database. The biggest problem we have in underground mining is people don't drill enough. As I like to say, we are the urban drillers.
Yeah.
If you look at what we did at Canadian Malartic, we were just under 2 million meters drilled there.
Windfall, 2.2
million meters.
Yep.
Hammond Reef, 1.4 million meters. We're at 800,000 meters here for 2 million ounces of reserves to start with, and another 3.3 million in resources. But we could easily put another 500,000-600,000 meters in that immediate zone that we're in right now, and just to drop it down and take it from 350 down to 1,000 meters. So you guys can do the math, but at 1.5 million ounces for every 100 meters, if we get to 1,000 meters, it's a pretty good project. The reason I'm doing this, Denny, is because I believe this is going to be a mining camp.
Yep.
If I thought this was a couple million ounces, I wouldn't bother with it.
No, there's obviously more.
I got other things to do in life, and I got a pretty nice cottage I like to hang out at. So
Yeah.
So this is pretty exciting stuff, and from where I sit, Chris and myself, this is a very exciting mining camp, and I think that much like we had a lot of naysayers at Canadian Malartic when we did it, we never raised any money in Canada for the first 5 years that we had Canadian Malartic. It was amazing. Montreal and Toronto, everybody had a buddy that worked up there and said, "Oh, it doesn't work," and we ended up getting all the money out of the U.S. and Europe and some Aussies.
Well, I think
soon turned into Canada's biggest mine, and then Detour came off the back of that. And if you look at what Agnico is made up of now, 75% of their ounces come out of what they got from us and what they got from Detour, right? Because when they got us, they got Upper Beaver, the whole Kirkland Lake camp, all the Queenstone assets, and Hammond Reef. There was 24 million ounces that we had drilled off on the bulk tonnage side of things when we got taken out. Plus, we'd made the Odyssey discovery, which we didn't have time to follow up on because those numbers just started to come in the spring of 2014. So,
Yeah.
Kudos to Agnico. They got a 16 million ounces that they didn't have to pay for out of that one. So, but they've done very well on M&A, and I'm really glad that they ended up with the project. If we had to sell, I would have rather it went to Agnico than anybody else.
Yeah.
And they've done a great job, to keep that, to optimize that mine, take the technologies there, and to build that out into, what's going to be probably one of the best gold mines in the history of the world. So,
well, I think one of the key pieces you're saying too, when I'm hearing about all these projects, and certainly something I took note of, is when we talk about Barkerville with Frank Callahan and the shout out to stitching together that quilt play of a district scale land package. You're saying, okay, we've got a couple million ounces.
We have 2,000 square kilometers
it's
of
a district.
contiguous mineral rights there, and a lot of that's, the bulk of that was put together by Frank in the beginning.
Right. So God knows how many millions of ounces could be found in the future, maybe the decades to come, that are probably on that project somewhere.
Well, now that we understand this thing, so if you look at it, we've averaged 1.2 million ounces per kilometer of strike.
Yeah.
Down to 350. So, if you could forecast that through on the other 10 kilometers that we've already drilled on and we know is there, we see exactly the same vein corridors, the same harmonic, the same distance between the vein corridors. If you can extend that out of 1.2 million ounces per linear meter just down to 350, you've already got a world-class deposit. Now, if you can knock that down to 1,500 to 2,000 meters, which we believe is easily doable in the system, now you're in Canadian Malartic territory.
Well, it's fantastic. I mean, I think if you look at too the Queenston acquisition, when you guys back in the day with the Upper Beaver, but that, like, when someone looks at that land package of what that was, it wasn't just Upper Beaver. It was the entire.
Well, what everybody forgets is we also had the Southwest Mine Complex, which Tony got in Macassa from us.
Yeah, well, exactly, because the on the Queenston ground, there was a shared boundary on the SMC.
Everything that's being mined at Macassa now is
100%.
on that Southwest Mine Complex that we sold to Tony back in the day.
Yeah, and I worked at Macassa when we were drilling the SMC, when we discovered the SMC. In fact, I was a geologist
under Charlie
there.
Page.
Yeah. Well, it was me, Mike Sutton's. I was working there. I was a student. I was like a co-op student. And it was
shout out to Mike Sutton, still the best mullet ever.
Yeah, Sutton, Stewie Carmichael, and that was to Chris Evans and a bunch of other guys. We don't get much credit for that one because it really was Charlie's deal, anyways.
But that was part of the Osisko.
But it was a district play.
Yeah, and we'd done a bunch of science on the Kirkland Lake camp, and we're in the process of trying to unwind both Lakeshore and Karatas. And we had a discovery there called Canadian Kirkland, which is still in the Agnico portfolio, which we thought was going to be important. It was more like a Canadian Malartic looking style thing with some dissemination because, you've got this huge high-grade corridor that runs from Val-d'Or to Red Lake called the Cadillac Break.
Yep.
It's the second most endowed gold structure in the world, having produced, I believe, over 300 million ounces now.
Yeah.
And along that structure, there are very few low-grade bulk tonnage deposits that have been discovered. Detour is one structure up, but within the main structure, Canadian Malartic is the biggest. Mm-hmm. You have a couple of smaller pits in Timmins that were sort of 30 million tons at like a gram. The Pamour pit, the Dome pit.
Yep.
And then, you run all the way over, and now you get into you and Downey's discovery at Greenstone.
Yep.
But there's still more to come out of the bulk tonnage disseminated deposits within that structure because the exploration was never done for it. We were starting to do it at Canadian Malartic.
The intrusives were ignored,
yeah.
Right? It was always after the fault structures. It was and the cracks. It was never after.
And you needed 6 to 8 grams to make an ore body work, and that went on for it was successful for 150 years. And the one that broke the mold was Canadian Malartic, and then Detour, right? So those are and those big deposits are what the future is. And if you look at, where the future of Agnico is, it lies within bulk tonnage mining. They recently built this big head frame in Canadian Malartic, 25,000 ton a day head frame. I believe it's the largest head frame certainly in North America. Mm-hmm. You saw Young Davidson with their cable hoisting equipment, and then you saw Goldex with their rail veers and stuff like that. So these underground highly mechanized systems and, being at the forefront of that technology is going to unlock the exploration and direct the exploration.
Do you ever find it hard that whenever you advance, let's say a piece, so you get at this big district play, and then obviously you have that sort of shining star preliminary deposit that you're spending and allocating most of your drilling into, right, to earmark and advance and de-risk. Do you ever find it hard to recapture attention and value for that broader district? Like that, that big picture story that is, fuck, here, guys, this could be a mine for, there's probably multiple mines.
Well, I mean, that's the story certainly in Caribou. We should have 40, 50 drills turning right now.
Right.
Because it's basically a bonanza discovery. We know where to drill, and we know that it costs us right now probably somewhere between $20 and $30 million to drill off 1 million ounces. And we could drill off as many million ounces as you and I will have before we forget what our names are.
Yep.
But we need the drill budget to go do it. So, we're stuck in that sort of, the policeman on this is the budget.
Yeah.
But we would be able to significantly increase ounces there if we go back to drilling. Tactically, what we did in that case, where we have that we know we're sitting on a very large discovery and we just need to keep drilling, we wanted to get the permit first, because being in BC, everybody's like, oh, you'll never
Good
get
luck with a permit.
blah, blah,
Yeah,
blah.
exactly.
So we've achieved that goal. So I don't think that everybody understands how important that permit actually was.
Yeah. It took a long time. Well, not that long, but it took you some time.
We were the first ones to go through the new sort of streamlined BC permitting process, the EA process under the NDP government. And they said, the goal is going to be, heavy on the front end with the EA certificate and then a smaller scale piece on the back end, because we'll have dealt with a lot of stuff in the EA, which was true. So we got our fully EA certificate in November 2023, sorry. And then we were a little over 13 months to get the Major Mines Act permit.
Mm-hmm.
And, when you look at what happened with the NDP, they got elected and they formed their government on Monday. They announced who the cabinet was going to be. They swore in the minister on Tuesday, and he announced our permit on Wednesday. And we were on stage and at the Terminal City Club at the BC mining group's stage, and he said, I'm just getting started. I've got a brand new ministry because they separated energy from mining. So I think BC's on the way. They know that they need the mines.
So that's a big pivot then. So they've divided the energy from mining.
Yeah.
And so this guy now is mining, and they're pro mining. We're still cautious on energy.
Right. Whereas mining was getting overrun by energy before, because BC oil and gas is so big, such a big beast, and it requires a lot of attention, that they've separated that into two ministries now, which I think is a great step forward. And then they've got a dedicated minister who comes from a background of job creation.
Yeah.
He's definitely jobs and economy oriented guy. So, I think that's what was important to this story. We were also able to get a very strong deal done, and big support from Denis, who's our principal First Nations partner there. We have partnerships with the Williams Lake and with Satzel as well. So those are ongoing, and without the support of Denis, obviously this permit didn't come through. We're clearly in their territory on this, and that's it's a big part of the story, is the support from that community.
Fantastic.
And it's a very they live in Quesnel. They're close to the project. They're very much involved. We have quite a few programs on the go. Chris Loader and the council there have done lots of stuff in terms of both environmental and social. We have a salmon release program that we do into the Bowron Lakes every year for about 50,000 fingerlings, somewhat ceremonial as well, that each child gets to release their own salmon.
Oh, cool.
So that's pretty cool. We're also working on some caribou mitigation strategies to support the caribou herd there, which is under duress, and we're out in front of that and try to make sure that we're going to be part of the solution.
Yep.
We've also worked hard to build capacity around the things that we need in terms of support as this mining area adapts. Things like aggregate drilling, support industries for cement and all the other things. We're going to be a big backfill mine, so there's a lot of support goes into this, and it's going to be important to the region. And this region has suffered a lot from both the bug kill on the timber side, as well as massive amount of forest fires that have taken out quite a bit of inventory from the sawmills. And we're seeing competition in the U.S. for fiber. in a big way. And wood doesn't work the way that it used to. There's a lot of composite woodwork now, so chipping and dusting. When you go to IKEA, you don't see a piece of real wood in sight, right? So
Yeah, it's all
ground fiber. A lot of composite,
glue.
compressed, laminated beams, and that sort of thing have taken over. Engineered wood has taken over. So that need for big timber and the uses has changed a bit. So eucalyptus trees that grow in 7-8 years in a southern U.S. climate, as opposed to 26 years in a temperate climate in Canada, are cheaper and easier to harvest.
Yeah.
And just the sheer amount of forest fires that we've dealt with the bug kill have limited that. So there's pressure on that local economy, which had 6 sawmills either shut down or scheduled for shutdown. And when you look at BC, once you go past Hope, it's all resources, right? It's ranching, it's logging, it's farming, it's mining.
Do you see this? I noticed something. So if you were looking at, so in BC, I noticed it actually in Ontario. This is going back a couple of years now. And what a lot of these timber companies that used to exist, right, are now shut down. As you're saying, there's obviously competitive reasons for that. But what's going on is a lot of this land's getting converted to this National Conservancy Canada or something like this, and they're conserving them. And then TD Bank and other banks have announced that they're going to play a role in brokering carbon credits, fucking offset credits from these lands.
Yeah, that's been a play that's been on the go. I mean, I've been involved in carbon trading probably about not quite 10 years, but 8, 9 years.
Oh, okay.
And we looked at the evolution of the carbon markets.
Yeah.
Carbon trading is complex. Probably Alberta is the only one that has a functional carbon market right now.
Yeah.
Ontario and Quebec are evolving, but still not quite there. And the big carbon sequestration programs have been on the go. Like if you have a forest and it catches on fire, it's no longer sequestered.
Exactly. Well, yeah,
but
what
it will
happens
regrow and sequester again. So
Sure.
How to monetize that, how to do that is one of the questions. Mining is such a small footprint that it shouldn't really be that big of an effect. I mean, when you look at the amount of hectares required to support agriculture or logging or pulp and paper activities compared to mining, mining's like not even 1% of the amount of surface area required for that.
But I wonder, like, is that what I think? If I'm mapping it out right, it looks like it might even be these timber companies and these pulp and paper mills are selling their ground, to these government affiliates that are establishing these massive conservancies for the purpose of brokering carbon credits. It almost looks like that's what's driving the conversion of these grounds. And I'm like, well, shit, like maybe that's why, okay, I can agree that at IKEA all the board and the wood that you see is, particle board and
composite
glue and pulp, right? But composite stuff. And now a lot of deck is like those recycled Pampers, like that like kind of it's like plastic stuff,
plastic faux wood.
Yeah, it gets like a gazillion degrees.
Hardly any microplastics will come off of that.
Right. And so, but I'm looking at that and going, I wonder if that's the MO. Is it was it the industry not being there, the demand not being there, whatever, there's no money in it, or was it actually proactively dismantled?
I think we're very much in the land of the unintended consequences on a lot of this stuff.
Oh, okay. Yeah.
ESG came out. It was all very exciting. Now you've got BlackRock saying that they're not doing ESG anymore. You've got Cathie Wood has announced a company that's now going to only invest in companies that don't have DEI. And the world is, the pendulum is swinging on the whole ESG momentum issue. I don't know.
I noticed that too. Yeah.
The carbon markets have been complicated. There was a lot of early movers in the carbon sequestration business. Very few of them have panned out.
Yeah.
And carbon credits and the ability to trade carbon credits has been questionable in a lot of places. And having a mature, carbon credit tokenization in crypto was supposed to happen instantly. It's been like 10 years I've been hearing about tokenization of carbon credits, and we're seeing very little reality of it.
Yeah.
So, we're in that, notional euphoria that set in about how great all this ESG businesses were going to be and how much wealth was going to be created. And quite frankly, notionally has not manifested itself in a big way yet. So the first wave is over. We're in the second wave of this as to how do you monetize it, what's realistic about to deal with it, and what are you going to do with sequestered carbon credit lands, in the long run. I mean,
there's a lot of them though. All of Ontario, like all the northern Ontario, almost all the patents. I tracked it. It was insane. They were buying up the patents, like literally from north of Sudbury all the way up. There's township after township after township, and big private patent lots, and they all got mopped up by these carbon credit, like conservation. I think it's called National Conservancy or Conservation Canada, something like this. And they all bought this shit.
So, I mean, the other discussion point of this is, what are First Nations going to do with all this?
Right.
Because they have territorial land claims over all of these lands. The bush economy has been destroyed for a lot of the First Nations that used to work with us in prospecting and mine development and logging.
Line cutting, all kinds of things.
Line cutting, logging, So, when I deal with First Nations, and often, like, if I look at where I started working with First Nations, it's like the 1980s.
Yep.
We're still working in those communities, but everybody else is gone. These carbon companies are a couple of laptop jockeys sitting in the TD Tower.
Yeah, flying a drone over. Yeah, exactly.
And there's no jobs going into the territory. There's no jobs being created, and there's no expertise being transferred into the communities. So they've missed on the ESG side a lot of these things.
I think for me, if money grows on fucking trees, then it's probably bullshit. Like we used to
say money doesn't grow on trees, but trees are money.
Well, that's true. But
I think the preservation of 40 million Canadians trying to save the Earth's atmosphere by sequestering the forests in Canada is a value add idea, but not likely to have an overall effect on much. Because we didn't really impact that much anyways, and all these boreal forests, they reach a decadence point, and then they burn or they die of insect infestation or something. I mean, a lot of what people don't understand about the boreal forest is a lot of the forest is only renewed through fire.
Yeah.
Like 60%, 70% of the species, their pine cones will fall on the forest floor.
Yeah, like a jack pine.
They will only seed after a forest fire. They will lay there decadent, not doing anything for years and years and years until there is a fire, and then they regenerate. Because the smaller trees, if they germinate and there's an overhead canopy, they can't grow. Mm-hmm. So they need the fire to be released and grow. So these are natural cycles that we spend a lot of time trying to prevent. Forest management hasn't been a great success in a lot of cases where we've oversuppressed forest fires instead of like managing them and letting them occur. Smaller forests, fires more often. Instead, we're getting bigger fires less often, but when they do go, they're completely annihilate everything. Whereas if you had smaller fires, they would be, flora and fauna have a chance to get out of the way.
Yeah, exactly.
As opposed to getting wiped out completely. So there's work to be done in the forest management side of things. I think that First Nations has to get an economy that works for them, and mining is one of the few things that's left that we can't move mining deposits from where they are. Mm-hmm. There's no way to move them. When it comes to forestry now, you would say that was the same thing, but now it can be moved to a tree farm in Mexico,
sure, Brazil or
wherever. So the forestry industry from the First Nation standpoint is no longer a reliable economy.
Right.
And then the amount of urbanization that's gone on across the world. I mean, you see small towns in northern Canada just abandoned. You drive in and it's there's even if there are if there's 1,000 people there, I'd be lucky you know, if there's 100 full-time jobs in town.
Oh, I'm from one of those towns.
There you go.
You know, so that's
where I grew up too, right? It was Kapuskasing in Northern Ontario, and if the, you know, everybody slept better at night when they could hear the mill going. If the mill went down, everybody woke up and went to see what the problem was, because it might not be a paycheck. You know, so that is a reality of Northern Canada. It was developed a lot on the back of the forestry industry, the mining industry.
Yeah.
We've seen, you know, when you look at Northern Ontario and Northern Quebec, and you look at the amount of mines that are going to shut down in the next 10 years, it's no joke.
No.
Like, you know, look at a town like Timmins or Kirkland Lake. You know, you don't have 50 years of mining lined up right now. You got 5 or 10.
Mm-hmm.
You know, there's no, like, Kid Creek shuts down in 2 years, I think it is.
Yeah.
In Timmins.
And then and Newmont already got off of, you know, the dome and everything else up there, right?
Yeah, and nobody's doing enough investment in exploration / R&D, you know, to do this. We don't have the big sort of, you know, multi-decade exploration programs at Noranda or Falcon Bridge or Inco. Those guys would run, right? They had 50-year plans.
Or even BHP. You know, there's companies back in the day that had these big, massive...
Anaconda. I mean, the number of Anaconda projects that I've gone through in my career.
Sure.
I must have been on 100 of them. And, you know, these guys did good work, and they would have, these projects would run for 10 years without a discovery.
Yeah, for me, Noranda, Falcon Bridge, I've come across a bazillion of them. You know.
Well, the joke when I grew up is if you wanted to have a discovery, you needed 3 things: a fault, a fold, and it had to have been dropped by Noranda.
Right. Well, put newfound gold.
Yeah, those
in that
3
camp.
things. Yeah, those 3 things, you might have a shot.
Yeah, well, newfound checked all 3 boxes.
Yeah, you guys had a great success there.
Yeah, it was, well, you know, it was. Listen, I saw
100 people been to that outcrop.
Oh, for sure. But it was the same idea. It was like I had seen what you had done. I seen the projects that you guys got keen on, like Windfall. When you put the Windfall thing together, it wasn't just like the historic showings. That was it. You took the whole district. This Barkerville thing, I saw the value in that. It was the whole district, and same with Osisko, same with Queenston. The projects I had seen were district scale projects, and they were district scale projects with localized discoveries within them. But you could see a footprint for a lot more. And with Newfoundland, that's what it was. It was a wide open district, and so you could look at it from those you know, historic showings, or you know, there's maybe a lot more where this came from.
Plus, if you can get Eric to make an investment into it, he tends to get lucky a lot. So.
Well, that helps. Yeah.
As he often tells me, I'm pretty lucky for an accountant that doesn't know anything about geology.
Well, you know what's funny with Eric is he does well, and I noticed this with you too. Is you know your projects, you know the geology of them, you know what's going on. And Eric's the same way. He knows he does his homework on these things more than a lot of people, I think, give him credit for or understand.
Yeah, I remember the first time I showed him Canadian Malartic. It's like 2004 or 2005, and we'd published something called a potential resource, which you can no longer do because of us. We were the first ones to do it in 2004, I think it was. A 4.3 million ounces potential resource based on the historic data that we've been able to compilate at that point in time.
Yep.
So I was in Eric's office, you know, where the big gold coin is, and he comes in and goes, "Oh, you have 5 minutes here," and so I get into my presentation. And he's like, "Hold on a second." He says, "You got 4.3 million ounces in northern Quebec, and I've never heard of you or the deposit." And there was 2 other people in there. I won't give them the names. But he goes, you step outside for a minute. I want to talk to this guy for a minute." He says, "Okay, tell me the story from the beginning. Who are you and where do you come from?"
Wow.
And so I told him, "Yeah, you know, I did this, and I went to Haileybury, and I became a diamond driller." So for years after that, he called me the driller. You know, so that was how. And then, you know, fast forward 2009. Was the end of the world, and we had Canadian Malartic. We had a feasibility study of about 8.3 million ounces at the time in the reserve. And it was 2008. I was trying to finance, and everybody was just like, the world was done. And you know, one guy in New York, I called him up and said, "You know, we put this feasibility study out. We need to raise, like, you know, at the time we needed like $800 million, in 2008." Okay. And he says to me, "God himself doesn't have $800 million left right now. And he's sure as shit not giving it to some dumb miner like you."
Really?
I was like, I called him back. I said, "So I'm going to be in New York next week. Do you want to get a drink or something?" So he came to get to the cocktail. He said, I wanted to see like how dumb you are. I tell you you're an idiot and you invite me for a drink. I don't get it. So I'm intrigued. Why am I here? So I told him the story. He's like, you're kind of a weird guy, and I'm not sure I know what to make of this. So fast forward to February '09, and I could feel the hair at the back of my neck running because we run a joint venture process, and Gold Corp and Barrick and everybody were in the process, and nobody would give us a partnership, right?
Mm-hmm.
So I knew that something was going to happen because not everybody had the data. They all knew that the project was good.
Yeah.
And they knew it was big, but they all basically looking at me going like, oh, we're not going to give him a joint venture. We're just going to run him over. So I went to see Eric, and I said, Eric, I got the hairs on the back of my neck standing up, and I think something's going to happen here. We need to raise money now. And in classic Eric fashion, he's like, well, Sean, how much are you going to raise? And I start the usual, well, blah, 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 blah. Like, I know you guys. Here it is. If you raise less than $200 million, I'm a zero. If you raise 200, I'll give you a $50 million lead order. And you can go tell everybody you got $50 million from me. But it's got to be 200. So I left the office with a $50 million lead order in my hand. And we ended up raising that day. I got a bought deal from Westwind and BMO. Bob Sanga at BMO and Dave Beatty at Westwind. I had a $220 million bought deal at 3:45 p.m. that day, which had its own color to it. And we went out live with that deal that day, and the book went to $1 billion.
Wow.
This is February '09. Like, we're just, the world was still ending, but the lights had just come back on for gold.
Yeah.
So we upsized it to $350 million, and the 15% over allotment got it to $403 million.
Boom.
And we had a 7-month warrant on it, which is a weird warrant, half warrant at 7 months. So it tied up with another warrant that we had, because my attitude at the time was like, I need this warrant out of the way. I either need the money in the bank or I need the warrant gone.
Mm-hmm.
So we did that, and so that financing that day set the roadmap for $403 million that day, and then those other warrants came in, and so it was $643 million we raised that day, and that's what made Canadian Malartic, and that's what made Osisko.
Wow.
And that all happened probably in 5 minutes having a coffee with Eric. If I didn't have that $50 million lead order from Eric, I don't know what would have happened.
That's wild.
And that, and there was a famous picture of me because the order I had from Eric, I wasn't sure exactly how long it was good for.
Yeah.
And I was too scared to call him and ask him if I could use it for like a week.
Right.
Because I figured he'd pull it back. He might remember that he did it. So I know the feeling. By 2:30 in the afternoon, I'm calling the bankers. I said, where's my bought deal letter? I need a bought deal. It's got to be now.
Yep.
And they're all, Sean, we're in our process. We're in a process. You got to be patient. You need to be patient. So I got my assistant at the time to go down and get a Louisville slugger, and I had it printed on one side, patience reducer, and process enhancement on the other. I put a pair of Ray-Bans on, a black toque, and a black leather jacket, holding the Louisville slugger in my hands, and had a picture of each side of it taken, and I sent it to both the BMO guys and the Westwind guys. I said, if I don't have a bought deal by 3 o'clock, I'll have new bankers at 3:15. So, I got a call back from BMO compliance, like, you can't be threatening our bankers like that.
Holy shit.
So there's quite a bit happened that day. And we were sweating bullets because that was, we knew instinctively that everybody that had our data really didn't have a choice but to go on us, right? Like,
yeah, you knew you had the goods.
Because we'd spent a year doing due diligence with all these groups, and like,
right, you got a tier one asset.
We knew their technical teams were all excited. We knew that this was a big one, and we're in northern Quebec, which if there's any place you can move a town and get 120 megawatts of power, it was going to be there, right?
Sure.
And the classic, we had to move the Trans-Canada Highway, and we had to move 205 houses, six institutional buildings. Was there really one guy that held out? There was, yeah. Unfortunately, we had to go to expropriation with him, but his idea, he got some grifter from Montreal showed up and told him, we'll launch a class action lawsuit and we'll get paid, and you get $1 million for your house, and then you get 10% of the class action lawsuit. So he had done the math and figured out that if he launched a class action lawsuit and like $1 million for 204 houses each, that was 204 million. He'd get 10% of that, which was 20,400,000. Plus, he get $1 million for his house. That was 21,400,000. So that was his price. So,
Holy shit!
so we went to expropriation, and that was the sad part of that story. But it's the only thing CBC ever covered about us.
Right.
They never covered the fact that we created, thousands of jobs for.
And
20
by the way,
years.
People are very happy there now.
Plus,
and
we built. It's now the nicest town in the northwestern Quebec,
with like
it's
kids
got the
parks
best infrastructure.
and beautiful stuff. Yeah,
450 child's school built out of laminated wood with geothermal. None of that got any press except this one, guy that had. Unfortunately, Ken got corrupted by this grifter guy, and it didn't work out for him because we'd offered him a 4-bedroom house with no mortgage on it.
Yeah.
And he and his wife would have both had jobs at the mine doing environmental sampling work if they wanted it, and he was unemployed at the time. And so it was, it wasn't my favorite story, but the town itself, if you go there now, the mine site tour that we set up is the #1 tourist attraction in northwestern Quebec.
Well, it's unbelievable. Like it's like I've seen the pictures and stuff. I've never actually been there, but I've seen pictures of it.
And we built the rodeo, the Osisko Rodeo Stadium. It's the largest rodeo stadium in northern Quebec.
Wow.
And it's not quite on par with Alberta, but it's on the rodeo circuit. Baseball diamonds park for tournaments. One of the best theaters in northern Quebec, seats 1,200 people, as well as a long-term care facility with 60 state-of-the-art long-term care rooms, which all had their individual windows, and now there's a lineup to get in there 10 years long. So those things were the good portion. It's a good project that should be receiving much more attention from the general markets, and Agnico's built on that. What we started, they've carried on with it, and it's a showcase for what the mining industry can do for a community.
Well, and the oddity is, as spectacular as that is, I've seen so many great projects and so many good mines get built, and I've seen transformations in communities just like that, and being absolutely fantastic. There's very little in this world that I can put a finger on that say, quite literally almost overnight. When a project takes off and the jobs get created, it's completely transformative to these places.
You look at the mining royalties that go to the government from something like a Canadian Malartic project. I think it's the third largest minerals royalty ever in the history of Quebec. So they've got the iron ranges there with the North Shore iron, which is a huge mining industry.
Yeah.
And those royalties go there, and then the amount of education that it drew. I mean, we're the first ones to set up a capacity building school for the Algonquin in that regional area. We built, I think it was 35 miners during the construction period. From the Algonquin community that got, if they didn't have their GED, we would get them through that, and we picked up a lot of high school students that hadn't graduated, and we got them their GEDs, got them qualified to work at the mine. And a lot of people that were just, we're not.
These are good paying jobs too. These are really good paying jobs.
You're making $60,000 to $80,000 a year at the entry, right?
Amazing.
And a grader operator or haulage truck operator make $100,000 a year now. So these are.
And a miner, if you're a miner 1 or even a miner
if you're making $100,000 a year in Canada right now, you're in the top 10% of Canada.
Yeah. What do you think a driller makes now?
140, 170.
And a miner's there too.
An underground miner is probably making 220
with bonus. Yeah.
Like an entry of less than 5 years, probably 150.
It's insane.
To be in the 1% in Canada now, you need about $200,000 a year.
So you think of a community like that, then you got hundreds of these jobs, and notwithstanding all the tangential benefits, because those people, they take their money, they take it back to town. They're going out for a restaurant at night. They're going to do this. They're going to do that. They're buying a new truck from the local dealer. Like, whatever it may be, but it's
these are people that live in the north and they use the north. They're not fly in, fly out people, right?
Right, exactly.
Whereas a lot of these other things are fly in, fly out, right?
Yeah.
Like you look at the Abitibi, and I would say that the average number of snowmobile kilometers of my crew up there would be like 3,000 to 5,000 kilometers a year. These people enjoy living in the north.
Totally.
And it's a great culture. It's nice communities and hardworking people, and great environment to raise kids in, and teach kids the value of hard work, and getting rewarded for hard work. Whereas you see so much of mental health issues in the cities now because, how many young people you say, well, I'll never own a house, I'll never get a good job, I won't be able to do what my parents did.
Yeah.
If you're in a mining community, you're probably okay.
You're fine.
Yeah.
Yeah.
If you're stuck down here trying to do gig work in downtown Toronto, the chance of you owning a piece of real estate is pretty low.
Yeah.
And getting a full-time job with just a high school diploma now is not so straightforward.
Well, that I saw a lot of because I came up in the early 2000s, was in school, and he graduated, and a lot of my friends had gone to, the cities to try to work on whatever the heck they were working on. And then I was out, in Timbuktu working in the mines and doing my things. But, one of the things I got a chance to experience was coming home at the end of the day, and the guys I was working with, they had the toys. They had a boat, they had a cottage, they had a nice truck, they had this, they had that. And I'm looking at, they got a wife and maybe kids and all this kind of stuff. And I'm looking at my friends and trying to grind it out in the cities. You're saying maybe doing gig work. One guy's washing dishes by night and doing this by day and whatever. The other half of them are on teachers, trying to be teachers. And so they were on the list, and, they never
Spend 10 years
planned.
trying to get full-time jobs
If
they're lucky. Yeah.
Exactly. And can't afford the real estate, can't do this, the rent. And it wasn't even close. It was like, well, shit. We all came from a small town. These guys want that too. That's the end game. And here I am working with guys that have that every night.
Well, if you look at downtown Toronto or Montreal or any city now, and you take out the civil servants, almost nobody has a pension.
Yeah, for sure.
Like, that's the fact, right? Like 90% of the people outside of the civil servancy have no long-term pension plan. That's not a sustainable thing. That means that the next generation, this generation, is going to have to support their parents because their parents won't have any income. So, if we're going to think about sustainability, I think we have to think about sustainability in a way that creates an economic platform that we can afford to take advantage of our ideals. If we want to be a socialist country, we have to have a plan to pay for it. If we're going to pay for it, we have to do it with industries that can actually be sustainable.
Yep.
If you look at mining, Northern Ontario, Northern Quebec, and these are the only reason those towns are there is from mining. Yeah. A few pulp and paper towns, but almost everything was opened up by mining, and that was done 150 years ago. So 150 years of industry would be what I would call sustainable. Creating 10 more Domino pizza stands in Toronto doesn't change the number of pizzas that people eat. It just splits the pie smaller, and there's less and less money for everybody that owns a Domino's pizza stand. Yeah. And so all this sort of bifurcation that goes on down here in terms of service industry, being jobbed out, that's okay, but it's not real work for real people that are going to have families and are going to be the backbone of this country. So we need jobs that people come here and they can actually support their life. They can be productive. Mm-hmm. They can build their house, have their cottage, send their kids to school, and expect to retire in dignity. What we're doing with all the ESG stuff now is I'm not sure that there's a plan to have any dignity left by the time you're done. So the removal of the dignity factor for me is one of the big missed stories in this whole ESG story. If you get rid of oil and gas, you get rid of farming, which everybody seems to think has got to go. You saw what happened in Holland.
Yep.
Too many chemicals in our farm food and all that.
Too much fertilizer.
But no plan to replace it other than some sort of warehouse food, synthetic meat and all the rest of it. And then you look at, the forestry industry sort of, tipping into plastics and composite materials where there's more chemical than there is fiber in any of these things. So where's the sustainability of the jobs in the industries that can support 5-6 generations of wealth and keep the spirits of people up? Mental health in youth right now is at an all-time low. From my experience, the number of kids that are being diagnosed and treated and prescribed drugs and mental health issues and antidepressants. I grew up in the 80s. I don't remember any kid being on antidepressants.
Right.
Maybe they should have been, but I don't remember it happening.
Well, I think there's a lot of this stuff too. I think look at you're right. People have their sort of their independence, their autonomy, their ability to earn, their meritocracy has been, eroded. And it's not to say that there isn't meritocracy, or at least the ability to work hard and earn something for that work. But the number of ways that people can do that in these cities and stuff is limited now. And the public service has been the only thing on the rise. In the last 8 years, is basically every other industry has been gutted.
Well, if you look at the materials that we need to build this next generation of economy, there's nothing really new on the periodic table.
Yeah.
We mine most of it. So, this is the industry that should be getting most of the ESG love. If you really want to have a modern economy, you need to develop the mining and metal business. You see what's happening in the Middle East. You look at Saudi Arabia and Dubai and all these countries. They're getting into the downstream metal processing industry. Mm-hmm. Saudi Arabia said that they're going to produce more metal than anybody else. They're focused on using their cheap energy. They have tons of natural gas, as do we.
Yep.
And they have tons of sunlight, so they're using solar,
both.
Wind, and natural gas when the sun is down to create an energy platform that operates at less than 1 cent a kilowatt hour. And so they're looking to recruit all the downstream businesses that are energy intensive, whereas our regulatory bodies are putting carbon taxes on and punishing those industries and driving them offshore, which is the worst idea you could possibly have, is to offshore your metal production, because now you have control of nothing strategic.
Well, not just that. I think when you look at the energy equals work, and one thing we can map out very clearly is that the most prosperous people and the most prosperous nations are those with the cheapest power. I mean, that is almost a 1-to-1 in the world.
Yeah.
And so if we want, notwithstanding those that care about the environment the most, it's like you need to be somewhat rich to give a shit about the environment.
Yeah.
And so, so our objective should be to make the cheapest power possible. And when we look at where the puck's going with AI and robots and data centers and all this stuff, like Elon Musk's got that new, well, even in mining, remote equipment and all this kind of stuff. Mm-hmm. At the end of the day, batteries, electric equipment, electricity is the key. And so if the manufacturing assembly line of tomorrow is going to be a bunch of robots that don't eat, don't sleep, and get plugged in, it probably should be a priority of ours to have the cheapest power possible. And certainly Canada is capable of having that.
No, I think that there's a few ingredients to being successful. If you're concerned about the environment and you're concerned about the amount of food consumption and consumption of everything, the number one control on population is affluence.
Yeah.
And the number two is education of women, and number three is cost of power. So if you can get cheap power, that allows you to have good education, because now people actually have time to work on education. I lived in Niger in West Africa for 6 years. It was the poorest country in the world, 193 out of 193 the 6 years I was there. The school year got canceled every year that I was there. Nobody had graduated from one class from grade 5 to grade 6 in the 6 years that I was there, and 10 years after that, it still hadn't happened. So you've got an uneducated population that's starving to death. You've got no plan to alleviate this problem, and that's what we're calling for here, is to make education, almost unthinkable now, because you've created an environment where there's no jobs once you get it.
Right. So what's the point?
And you're handing out diplomas that really don't lead to any social status, other than getting a job with the government. And now you've got a bloated civil servancy that's, look at what's happening with Post Canada.
It's crazy.
They're losing $750 million a year, and nobody has a plan to solve the problem.
A day. Like with what's going on now too, with all this shutdown, I don't know how many millions we're losing a day. But think about businesses being impacted by this.
You've got an unfunded pension liability that's out of control. The reason that the government can't just shut it down is the pension liability itself will leave the government. Uh-huh. So you've created these these utopian ideas that you don't have any way to finance or support, yet you're putting pressure on the industry, especially the energy industry and the mining industry as well, that are the only things that can really get you out of this mess.
Yeah, the only thing they can pay for it right now.
And the carbon tax is, by far the dumbest idea that I've ever heard. You're concerned about the price of food, yet you're putting, food is diesel. Let's face it, like probably 90 cents of a dollar on your stick of salary is diesel costs. Because it's mostly water. You have to kill everything that's in the field to make it grow. You need a diesel tractor to do that. Then you have to recruit it. Then you have to truck it in a diesel truck to where you're going. Then you have to maintain it in a grocery store that people have to come to in a gasoline or a diesel car. So the idea that nobody can figure out what they should have learned in high school was that, your food is dominantly diesel fuel and energy.
Yeah.
And it's, especially low calorie density things like kale and lettuce and everything, the amount of diesel cost that goes into producing a calorie of that food is quite high.
Yeah, it's crazy. Like the prepared Mexican salad, Caesar salad from Mexico is like unbelievable.
In a plastic bag.
Gets trucked for thousands of kilometers.
Yeah, or flown.
Yeah.
Yeah, so the whole thing is a big mess in terms of actually understanding the science of what makes it work. But we do have mining industry, and you're involved in a great project. We got great projects. We can create jobs. We can change these communities if we can keep the focus. Mm-hmm. We need regulatory support to come to bear. We need timelines that shareholders are going to be able to manage. We need knowable outcomes. When we do mine, as to what we're going to pay for fuel. Why would we put a carbon tax on something that we're taxing 6 ways to Sunday? If you look at any unit of metal that comes out of the ground right now, there's probably 20 times it's paid taxes.
Yeah.
By the time it gets there, between the income taxes levied against the workers that work there, the mineral taxes that are on it, the taxes on all the consumables, the energy taxes that have gone into it, the land taxes, the taxes on the communities and municipalities levy against the actual presence of the business, and then the amount of tax that gets paid through the regulatory environment, both the stock exchange and everything else, in terms of the amount of imposed regulatory fees that we have to run a public company. So we've got a huge regulatory body that's sort of eating the industry alive, if you will. So we need to get, hopefully we can get some sense in here and rein things in and get it back to a competitive business. But
yeah, my hope too. Well, listen, Sean, it's been awesome sitting down with you and talking to you. I hope you come back. Really excited about the project. Congratulations on the permit.
Well, stay tuned. We got our bulk sample underway. We're about 1.2 kilometers underground.
Nice.
We're going to take the bulk sample here just after Christmas.
Nice.
And yeah, we're in mine build construction mode now with the underground access. And now that we've got the full permit, we should be Canada's next mine build.
So we'll stay tuned on the bulk sample.
And then we're going to reinitiate the drilling now that we got that permit. We're going to light it up on the other 83 kilometers of mineralized trend that we know and love.
Nice.
And, it should be a good time for shareholders in 2025, 2026 as we start to light this thing up now that we've got the
and cashed up, ready to go.
We just raised 130 million Canadian.
Awesome.
So we got the triactor, and then we got a big gold deposit, a permit, and a bank account.
Nice. That's everything. That's everything.
Everything a mining guy could want.
Perfect. Well, anyway, thanks for coming in, Sean. Congratulations.
All the best of luck to everybody with their investments, and please give us a call. We're ODV on the New York Stock Exchange and ODV on the TSXV, but principally we trade on the NYSE. So
awesome.
All right. Thanks very much for all the work you guys do at Crash Labs and for hosting us.
Oh, thank you. Well, hopefully come back. Thanks, man. Cheers.
All good.